We are live, Impact Live, Money in the Morning, the best money culture TV show you'll ever see.
Good morning, Texas. Good morning, world. We are happy to be live. We're live. Really having a great time in a crazy world as it is, but it is nice to be with you guys every morning. We're wrapping up. What is this week? 3? Week 4?
I'm not counting, Bruce.
David's like, we have pubs in Ireland. I'm busy.
Hey, it's the weekend, right? We're starting this morning. No.
You look great.
Oh, thanks, man.
Yeah. What are they feeding you over there?
Cottage cheese, ham, beef.
Coffee, cheese, ham, beef. Sounds pretty good. I have to come see you very soon. I actually re-signed our deal with Money 2020.
Oh, yes. This is a fantastic conference.
Can't wait for Money 2020. Money 2020, one of my favorite conferences in the world. And, of course, we are a worldwide partner.
Sweet.
And very happily so.
Right?
Yes. We'll be broadcasting live from Money in the Morning, from Money 2020, Money in the Morning.
Yeah, man. Smart Money Culture TV.
We're live on Smart Money Culture TV. We're live on Impact Live.
We have the best network in the world.
Crypto Cake YouTube. We really do. We're live on Bruce Porter Jr. LinkedIn. We're live on Networks Manager on X. We're also live on the Washington Elite YouTube. We're on TV in Houston, Texas at KVQT. Beaumont, thanks for listening in, guys. Beaumont, Texas at KAOB 32.4. College Station, Texas, K20, K3, KJ rather, 20.4. Corpus Christi, Texas, K33 QP, and that's 33.4. And Lake Charles, Louisiana. Thanks for joining in. I know it's 5 a.m. over there, and that's on K21 0B, 21.4. Smart Money Culture TV. Really putting together some amazing things. We will be also on Smart Money Culture TV, broadcasting live from Davos.
Nice.
As all the people that you never get to meet converge in Davos.
Right.
I mean, we get to meet them, but the average person doesn't get to meet them.
Yes. They eat at restaurants that are so expensive. The average person probably doesn't even want to go there.
It's so expensive. You can't really even get a place. It's one of those things. Everyone comes up to me, Bruce, I want to go. You know, and it's like two months before. And I'm like, you don't understand, guys. You need to you want to go? Let's start planning for next year. Okay. That's the way Davos works.
Yes. You could reach us from almost every country on Impact.live, amazing decentralized media platform.
It is. What we're doing at Global Boost Media is revolutionary. We are doing for media and communications what Bitcoin did for money. Crazy morning, of course, as we have it. The Houthis over in Yemen, the Yemeni Houthis.
Are those people that never mind.
You're probably better off. The truth is, like I always say, that people want the same things, and the Houthis are enforcing an embargo, basically a shipping embargo. But last night we decided unilaterally, no Congress, that the U.S. was going to bomb them, and so that's what we did. What's that?
I used to drive a hoopty, but I left that piece of thing on the side of the road.
Well, like I said, so far, all they've done is enforce the embargo. I mean, they've taken over some ships or anything, but they haven't killed anybody. And we went in there and we just bombed them, and like 20 missiles. I think we killed a few people. I'm never really in favor of all that stuff.
No, this is really terrible news.
It really is. Peace is always the way. And as well, a couple of Congress people came up and said that, you're supposed to get congressional approval, and they are. It's supposed to get congressional approval in order to do this stuff.
Yes.
Before we just go in and start bombing. So right now we are in, we're bombing Iraq, we're bombing Syria, we're bombing Lebanon through proxy with Israel, right? Of course, Gaza. Did I say Yemen yet? No, we have Yemen. Of course, the crown jewel is Iran. That's where we've been trying to go forever. I mean, we're talking going all the way back to where a lot of you guys weren't even alive. Wesley Clark talked about why we went into all these places. And, basically, let me just pull up that video. It was, we didn't really, or who knows, we didn't know what to do. However that works. We had a military that we could use this way, and so we used it that way. I'll let him say it. He says it better than me. I'm pulling it up right here. Let's see here, Wesley. I am networks manager on X. David, of course, is Sir David Porter. Matt Dixon with the VE, who'll be joining us momentarily. MD Trade. So here's Wesley Clark. These countries over there in the Middle East, these have been, on the target. This has been kind of a thing for a long time. Let's listen to Wesley here.
After 9/11, about 10 days after, to worry about Iraq, not Iran. I knew why, because I'd been through the Pentagon right after 9/11. About 10 days after 9/11, I went through the Pentagon and I saw Secretary Rumsfeld and Deputy Secretary Wolfowitz. I went downstairs just to say hello to some of the people on the Joint Staff who had used to work for me. And one of the generals called me and he said, "Sir, you got to come in. You got to come in and talk to me a second." I said, "Well, you're too busy." He said, No. He says, "We've made the decision. We're going to war with Iraq." This was on or about the 20th of September. I said, "We're going to war with Iraq. Why?" He said, "I don't know." He said, "I guess they don't know what else to do." So I said, "Well, did they find some information connecting Saddam to Al-Qaeda?" He said, No. He says, "There's nothing new that way. They just made the decision to go to war with Iraq." He said, "I guess it's like we don't know what to do about terrorists, but we got a good military and we can take down governments." And he said, "I guess if the only tool you have is a hammer, every problem has to look like a nail." So I came back to see him a few weeks later, and by that time we were bombing in Afghanistan. I said, "Are we still going to war with Iraq?" And he said, "Oh, it's worse than that." He said, he reached over on his desk, he picked up a piece of paper, and he said, I just got this down from upstairs, meaning the Secretary of Defense's office today. And he said, "This is a memo that describes how we're going to take out 7 countries in 5 years, starting with Iraq and then Syria, Lebanon, Libya, Somalia, Sudan, and finishing off Iran." I said, "Is it classified?" He said, "Yes, sir." I said, "Well, don't show it to me." And I saw him a year or so ago, and I said, "You remember that?" He said, "Sir, I didn't show you that memo. I didn't."
Uh-huh.
Show it to you.
So this has been going on for a long time. It's kind of how we roll, unfortunately. Military industrial complex that really runs the country. Here, I wanted to show you this too, because some of our tech. So the Houthis, they said that they have downed they said that they bombed one of our ships overnight. I don't know how true it is. They may have think they did. Who knows if they did or not? I kind of think maybe the ship's true, but they also said they shot down an F-22. An F-22 is a little harder to believe, but I wanted to also share this, because this is a UFO cloud that has been spotted as well over the last 24 hours over. Let me see here. UFO shaped cloud over Japan. Look at this thing.
Beautiful. It's classic how the UFO stuff appears as our technology being launched. It coincides with each other.
Yeah. Looks like pretty clear UFO. Then so I did a little bit of searching, right? UFOs, and so and I won't spend a whole lot of time on this, but you kind of got the same looking UFO over a bunch of different places.
Oh man, when I was in Corsica, I saw some clouds like this. They're pretty cool. Of course, you know that they're not natural.
Which that takes me to my and I won't spend a whole lot of time on this. It's time to bring on Matt.
Yeah, we got to talk ETFs.
We got to talk ETFs.
Talk about how BlackRock is dumping on us.
The BlackRock appears to be dumping on us. Classic. Here, let me stop sharing my screen. Sir Matt.
Hi, Matt.
Hi, good morning. Morning, Bruce, David, America, the world as usual. Good to be here. Yeah.
How are you
I'm
doing?
going to give a little overall look, and I'm going to take a bit of a closer look at oil, because you mentioned about the Houthis today and bombing ships in the Red Sea and so on, and it really is having an effect on oil prices. So that's, you talk about BlackRock dumping. We're seeing a bit of a well, we'll see what we're going to see. But that is the potential fly in the ointment that we've discussed. That things are looking great for crypto with this ETF. Let's just have a look here. They're looking absolutely fantastic.
You said it's always when everything looks perfect. When everything looks perfect, you gotta make sure. Okay.
Yeah. So let's see where we're going to go today. Can you see that screen?
Yes.
Yeah, you might want to maximize it, full screen it.
There you
like
go.
that.
The US dollar index. It's looking strong.
So we'll start with the US dollar index, because everything's driven by US dollar. When there's risk in the world, when things happen, terrible things like what's happening with in the Middle East with Iran backing these proxies and causing trouble, and the Red Sea, and potentially affecting oil shipments through the Red Sea and potentially through the Persian Gulf. This affects the oil price. And when there's risk in the world, money comes off the table and goes back into US dollar as the safe haven. So we've seen this before. This is basically a very, we predicted where the US dollar was fell to, where it's going to turn, and it has turned up quite nicely. We can see it's within a channel here, dollar index, and we tested the top of the channel, and it's been moving sideways and potentially moving down, but the risk is it could potentially go higher. I'm not going to go on too much. I did mention candlesticks yesterday, but the candle that we see here is what's called a doji. That means that the market is undecided, doesn't quite know where to go, and that's played out because the market then went sideways. We can see sideways move. And then we've got here another candlestick, which is potentially a bearish candlestick where the price tested higher, again, up to that overhead resistance, and failed and came back down again. And then we've got the little red candlestick following. So that's potentially going to push the dollar index down. Could we be seeing weaker dollar? Here's a bigger look at it, looking at potentially. There's two options here. We've got an A wave down. We could be either the B wave could be completed, and then we have a C wave down lower. This is good for risk assets, or we could still have a bit higher to go to complete the B wave. So we could break this overhead channel. So that's really important to see how we're going. So what's driving the dollar other than the risks in the world, those geopolitical risks? Well, what else drives the dollar is the economic backdrop. And we had inflation figures out of the US yesterday, that all important inflation figures. And just look at it, the core inflation rate came out higher than expected, 3.9%. And that, I believe, is what's caused the hiccup in the Bitcoin and crypto prices, a bit of a pullback on some of the tokens, although we'll see in a moment. Bruce's favorite is still powering ahead. That's Litecoin, of course. But 3.9% for inflation, for core inflation, that's pretty much twice the expected, well, basically the target rate that the Fed have for inflation. So, they want to drop interest rates because the economy is beginning to show signs of slowing in some ways, but they can't afford to because they have to keep inflation under control. And so there's still actually a lot of upward pressure on interest rates when people are saying they want lower rates, and maybe we'll see lower rates in the middle of the year, but we've got upward pressures on interest rates here. We can see the interest rates are going higher. Inflation's going higher, so that means there's upward pressure on interest rates. So again, what other things could be causing this inflation in the market? Well, one of the big drivers, one of the big constituents of inflation is obviously oil prices. So oil, obviously, it's used. We have the price of gas, as you call it, at the pump. We have the cost of delivery of manufacturing, the cost of manufacturing itself. All of these things use oil. And so that's what's been driving the price higher. Now, I did this chart this morning, but it shows very nicely how from the low point here on the left back in May, we've had a wave 1 up, 2 down. I measured that as 100%, transposed it to the start of wave 2. It gave us the exact top as we've seen before, 1.618 is the wave 3. That's normally the extended wave. Then we get an ABC wave 4 down and a wave 5 higher. And then we've had an ABC down. Whereby the C wave is exactly, again, 1.618 times the A wave. This, you couldn't make it up. It's amazing how structured the market is and how potentially predictive these things are. But what's important is 5 waves up is in the direction of the trend. It's what's called impulsive direction of the trend. And then 3 waves back is what's called corrective. So that means the next move should be to a new high above this wave 5. It means potentially we're going to get quite a big pump in oil prices. Now that will have an effect on inflation, and it will have an effect on the US dollar, and that will have a knock-on effect to risk asset prices. So here's that again. Well, let me just go back just momentarily. Just look here. This was this morning. The price was $73.61 for oil there. And then just look at it now. Just a few moments ago, I took this screenshot, $75. It's rocketing, and this is on the back of the concerns of shipment through the Red Sea and through the Persian Gulf. So oil prices are already picking up from the level that we expected, precisely that 1.618 level. And we also have something called hidden bullish divergence, which is basically when we get higher lows on the price and lower lows on RSI. That's called hidden bullish divergence, and it tells us of a continuation of this uptrend here that we see in price, a continuation of uptrend. So potentially we may see higher prices on oil, which is not good for these risk assets. So short-term things may be looking a bit rocky there. But there's also good news internally on the crypto world. I showed you this, but we had a golden cross some time ago in Ethereum, gave us an 8x push to the upside, and we just got another golden cross now. So potentially that's looking good for Ethereum. For Bitcoin, we've got not just a golden cross, but a super golden cross. And this has actually never been wrong in the past. So potentially looking really, really positive there. Although I must give a little caveat, the death cross that occurred back in earlier last year, was supposed to cause reduction in the Bitcoin price, but in actual fact, that was very, very short-lived, and we saw Bitcoin appreciate substantially after it. So these signals, they're not 100%. The Super Golden Cross has been 100% to date, but it doesn't tell us for certain whether it will be in the future. But it's a positive sign, and there's lots of other positive signs in there. I won't go into it right now, but I will just touch again on Wave Basis platform that I use. And this is really good because it does the Elliott wave analysis, which has taken me many years to learn and perfect, but it's an automated system. I still actually like to do my own analysis, but it's always good to get have a double check and just see if there's any alternatives that could be out there. So I've actually negotiated a discount for them. You might be able to get this link here, thewavebasis.com. This is the link. As I say, I've negotiated the discount. If anybody wants to get a subscription to this, you can get, I can't remember what the discount is, but it's a discount anyway, over and above anything you can get with them. But this is amazing. Again, it shows the inverse correlation between the US dollar and Bitcoin and risk assets. And we're seeing potentially that if this B wave is complete, the next is a C wave to take us down below this A wave. Now, as we said, inversely correlated means if dollar index is going to fall, it means crypto is going to rise. And that's what it looks like here. We've got a wave 1 up, 2 down, and we're working on a wave 3 to the upside, which should take us substantially higher on Bitcoin. So I think all of the internal information, everything we know about Bitcoin and cryptocurrency right now is screaming, it's squeezing higher. Prices are going to go higher. But I'm just giving you that little bit of a warning. The backdrop is that there are some concerns, both geopolitically and macroeconomically. But the crypto itself is looking amazing. Probably the most attractive asset class of them all right now, in my view, but others may think differently. So I'm just going to touch finally on a couple of lovely assets. So we've got XRP here, which is still staying within this expanded diagonal channel. And we just about touched the bottom there. I said price was likely to push higher, and that's precisely what it's done. We touched the price at 49 cents here. We're now at 59 cents, so we're 10 cents higher, so we're 20% higher on the price, and potential to go much, much higher. So that's looking positive. And then finally, we'll just have a quick look at Bruce's Litecoin. Looking really good here because this is the 50-day and the 200-day moving average. If we get a crossover, if the 50-day crosses above the 200-day, then that's what's called the golden cross, and it could be a really good sign. And potentially, we may have had what's called a leading diagonal here in Elliott wave terms. It's the one situation where you can get crossover of wave 4 and wave 1. So potentially a leading diagonal wave 1, ABC wave 2, and we could be starting on an impulsive wave 3. Wave 3 is nearly always the extended wave, which would probably take you to 1.618 times the wave 1. So I haven't even got a big enough chart to show you where that would take us, but it's amazing. And once again, we look at divergence here. We once again here have hidden bullish divergence where price lows are higher and RSI lows are lower. And that's actually what's called hidden bullish divergence. And actually, it's quite predictive. We've seen the price rally and we've got an amazing candlestick pattern there to support it all. So all in all, it's looking great. And probably Litecoin is one that down the line may also get ETF approval. So things are looking really good there. So thank you, for that opportunity to share what we have today.
Well, really cool. Yeah, Litecoin is one of those ones I'm very optimistic on. I think that a 10x on Litecoin is certainly doable. That takes us to about $760, $800 in there, and it's, I don't know if it's spiked up there before. I think officially the all-time high is what, $400 or something like that. $400.
I saw something yesterday. I see a lot of tweets out there, but I think the price of Bitcoin peaked on the 20th of April, 20th of the 4th, and I'm not quite sure. I'm just trying to remember what it was, but it's basically saying that the next peak they're projecting is 420,000 for some reason. I'm not sure what the relation was there, but anyway, they were saying that the next peak should be 420,000, and they were saying that was it. The next Bitcoin halving is projected to be April 20th again, so 20th of April is the Bitcoin halving. 20th of April 2021 was when we reached the last peak, which was 69,000-ish. And they're saying possibly, maybe 20th of April this year, we might see a new Bitcoin peak. And they're saying just maybe it'll be 420,000. It's a long way to go in a short time, but who knows with Bitcoin, because it can do some crazy things.
It really can do some crazy things, that's for sure. I think as well. So we have Litecoin, we have Ethereum. These are Ethereum next up with the ETFs. My opinion, I think obviously we'll all agree on that. Litecoin, I think, could not be far behind. Again, now Litecoin is an OG coin, as we talk about. It is not controlled. It cannot be controlled. It's a decentralized cryptocurrency. It cannot be controlled by a central force. Can't be seized by court order, and these types of things. Ethereum can. Bitcoin is the same as Litecoin, so it'll be interesting to see how it plays out. Of course, Global Boost is the same. We always talk about Global Boost as well. Same older blockchain technology that is impossible to counterfeit, seize, freeze, and take by court order. It is pretty interesting. How are we looking on? I was poking around on the news per se. A little bit of crazy market up and down, right?
Yeah, Bitcoin's still holding above 46,000. It's 46,106. Ethereum's looking really good, 2,631. As you said, every blockchain, every crypto has its own particular facets and interesting bits and pieces. So, as you said, Bitcoin and Litecoin are completely decentralized. Ethereum is a lot more centralized, and you have got other tokens. I mean, to be fair, even XRP, there's a lot of centralization. In fact, they are quite centralized because 45% of their tokens are held by the Ripple Foundation, and I understand they're dripping them onto the market on a regular basis. So it's like as though there is some kind of inflation going on there. So there are differences. You need to do your due diligence, do your research about all the different tokens. But one of the big key things for acceptance as an ETF is whether how decentralized it is, and they don't want a centralized currency because potentially these centralized ones, the price can be manipulated, and that's one of the things they really are looking to avoid. The SEC are looking to avoid that. So that will put things like Litecoin as a front runner, but there are already applications in for Ethereum ETF, and I don't doubt they'll probably be accepted. And that's why we're seeing a big run up now, I think, in Ethereum. It's playing catch up to Bitcoin.
Yes, and the thing about Ethereum is that there are so many tokens in the ecosystem that need Ethereum for gas. It is unbelievable the impact that Ethereum has had on this space. There's nothing like it.
Yeah, but we're seeing gradual migration to other chains now that are even though they've moved over to proof of stake with Ethereum, so it's a lot more energy efficient than it ever was. But even so, you're still seeing other chains coming on. I mean, you've got Solana, for example. You've got other chains, Polkadot. And there's so many out there. There's new ones coming on. There's Powerchain coming on. These have much better fundamental metrics in terms of transaction speed, TPS, transactions per second, and security and cost of validation, decentralization. There's lots of things that you need to understand when you're actually looking at the potential future for cryptocurrencies. And where cryptocurrencies were 5 years ago, or let's say 5-7 years ago, it's a very, very different landscape today. And I think 5 to 7 years from now, it will be very, very different again. That's why I think it's really important to do your DD and understand, whether that token has a real future, whether there's a better competitor come into the space. And that's why I love research.
DD is due diligence. Go ahead.
Do you think that Bitcoin is probably some of the banks like BlackRock's biggest play so beneficial. I would say that they probably doubled their money over the past few months.
Yeah, I mean, there's, everyone's wanting to have a go at, wanting an ETF because there's so much money in there and the fees are quite high, but there is competition there. There'll be real competition. Those fees will come down, and there's still much lower transaction fees than you see on the exchanges, on typical exchanges. But the only advantage of, for example, an exchange over an ETF, as I see it, obviously there's a couple of advantages. With an exchange, you've got flexibility, liquidity, moving in and out very, very quickly and easily. With the ETFs, you wouldn't be able to trade it over the weekend, for example, Saturday, Sunday, perhaps, whereas you can with an exchange. So if there's a dump, if there's a major geopolitical issue or something like that, then the exchange is going to be where you'd want to potentially have your asset. But if you're a long-term hodler, and as so many people are with their traditional assets, then maybe ETF makes really good sense because they're a very cheap way to hold the asset. And those management fees, as I say, will come down dramatically as more and more competition comes into play.
Yeah, it is pretty interesting. I mean, it's as I always say, crypto is not for the faint of heart. A 10% move, or even sometimes over the years we've seen more 20% move on Bitcoin. I mean, that will leave you with a heart problem sometimes.
Yeah. I saw some nice cartoons this morning just showing about the fluctuations that there have been. As I say, I know someone who got into this right at the beginning when it cost a few cents. And as I say, when it got to $1, I'd have sold it. When it got to $10, I'd have sold it. $100, I'd have sold it. $1,000, I'd have sold it. I would never have held it all the way through. So they must have nerves of steel. But it paid off because they started off with just a few $100 when it cost nothing, and they're now worth hundreds of millions. So there is a real logic behind holding some of these assets, just buying them, holding them no matter what. You don't need to be nervous. Just lock them away in your offline wallet, so it's absolutely safe from hacking, and just hold them, forget them, come back to them in 10 years, and you could be extremely wealthy. But there's also the people out there who want to trade actively. I'm one of those. I love trading actively, although I have got some assets that I do hold long term. But those big assets, there's so much trading opportunity with crypto. The volatility you talk about is just opportunity. It's what traders love.
It's true. That is exactly what traders love. They love there to be volatility. That is a trader's dream. There's still a lot of volatility that will probably iron out over the next few years. We used to see we're used to seeing $1,000 or $3,000 moves in Bitcoin, but when Bitcoin is $3,000 a piece, or 10,000 or 20,000, it's a bit more of a shock than is it as at 46,000. So
yeah, I remember, because I've been trading for many years, as you know. I remember when the Asian markets were all emerging markets, and there were some massive moves on those Asian markets, the Hang Seng and the Nikkei, these and even other ones more, even the smaller markets, Bangkok and so on. These were highly volatile markets, not for the faint-hearted. Very like Bitcoin and cryptocurrency is today, or I should say crypto. I think Bitcoin is actually really maturing now as an asset. And as it matures more and more, I believe there'll be less and less volatility, but I still think there's a good upward trajectory. But as more money flows into it, and a lot more of that money, as we just mentioned, in ETFs will be held long-term. It's not active trading necessarily with ETFs. It's just people wanting to hold it as a store of value. Then that will remove an awful lot of volatility from the market. So, Bitcoin will become less and less volatile, and there may be a play to trade some cryptos against Bitcoin. So like you said, other ones that are going to be coming up maybe soon potentially for an ETF approval, maybe Litecoin. You can actually trade Litecoin against Bitcoin potentially and increase the number of Bitcoin you're holding, or because of it. So there are lots of opportunities with the thousands of currencies there are. You can actually trade between them as well. So it is a world of opportunity.
Yeah, Bitcoin Litecoin was for years, that was the biggest volume trade. It's probably not anymore, but that was the market. Bitcoin, Litecoin. And actually I talk about it quite a bit here and there. A lot of people, of course, everybody loves Bitcoin. Bitcoin's the only one. But without the alternate currencies, without these altcoins, Bitcoin would have never had their initial pump. They would have never gotten such big pumps, because that was the only way we were able to buy other coins was through Bitcoin. That was it. You couldn't buy them with USD. There was no USD.
Yeah. And since that, we've now got stable coins, which obviously is the main currency pair now with Bitcoin. So you're looking at Bitcoin Tether is going to be the main one by volume. And these stable coins, as they call them, have really, really taken off, and they provided it makes it very, very much more simple now to trade Bitcoin and other cryptocurrencies, because you're effectively trading against the US dollar. A stable coin is effectively the US dollar, although there is some debate, isn't there, over how stable coins are. So we saw during the Luna crisis, there was a brief unpeg between Tether and the US dollar. And then again, during the FTX crisis, in fact, even after the FTX crisis, there was, what was it? The other stable coin that depegged. Basically, that was a risk with the banks, wasn't it?
Yeah. Oh yeah. No, I mean, these things, especially the algorithmic ones, pretty interesting. But it's basically how much liquidity they have at a certain point and how much they can put forward. Everything is supposed to be backed, fairly regulated anyway, 1-to-1. But of course, you still have to move things around.
The big issue with the one I just mentioned, USDC, was that they held a lot of their security was basically held in US banks, and it was held in bonds basically. And the trouble is, as interest rates have gone up, bond values have gone down. And if you then get a run on a currency, people wanting to withdraw a deposit or whatever, and that's what happened with the banks, then we did have a run on the banks. And there's actually, as we said the other day, more banks gone bust this year than I think any other year. Well, when I say this year, I mean last year, 2023. So there was effectively a run on a lot of banks at the time. That caused pressure on USDC, which caused the depeg at the time. And there was a massive discrepancy. I was actually out on Twitter telling people now, because I didn't think it was going to actually break, but it broke temporarily. And I was telling everybody, if you can get this, you need to buy into USDC right now. And it was guaranteed money. I think you're talking 16% overnight.
Yep. Yeah. Oh man. I mean, it is a ride, right? There have been some moves where you just hit it and you're like, holy smokes. Let me cash out real quick.
Yeah. Trading's great. It can be great. It can put you under pressure, but there's always opportunities. There's always those memorable ones that you caught them, like back in the 2008 crisis. That a lot of people could see that coming, the 2008 crisis. When Bear Stearns and all that problem at the time. And I did really well at that time. I was selling the Australian dollar against the yen. And did fantastically. And these opportunities come up. We had it with the depeg of the Swiss franc as well. So there's always opportunities in finance, but it's about keeping up to date with all the information, which hopefully we're giving you here.
Well, very good. Well, thank you. Thank you very much, Sir Dixon. Always a pleasure to have you charting stuff out. I think that the oil is pretty interesting. I think that's going to continue to go. We should find some good derivatives options for people if they want to go long on that. That would be pretty interesting if people wanted to participate in that oil. I feel like cooler heads are not going to prevail. So oil is going to go up.
Oil price is still climbing as we speak. So sky's the limit.
Awesome.
Good.
Okay. Sounds good. We will see you. Have a great weekend. We'll see you on Monday.
You too. Great weekend, everybody. Good to see you all. And bye for now.
Cheers.
Thank you, Matt.
So we have a lot going on as well. I wanted to play a little bit of the history of what we have with the central banks, because the central banks are how we're able to bankroll all of this really, in my opinion, nonsense, but whether you want to call it or not, the fact that Congress doesn't have to go to the president doesn't have to go to Congress, the military industrial complex doesn't have to go to Congress in order to ask to get the approval to go to war. It's just putting out this, the Federal Reserve. The Federal Reserve is a private bank. It was started by the Rothschilds, the Rockefellers, and the Morgans. And actually, Rothschild was trending yesterday for a little while. It's pretty interesting because this family, the Rothschild family, has they are really able to keep themselves out of the news really well. Let me play this clip here. Hold on. A couple that I want to play. So the history is kind of crazy. And, the Federal Reserve was started the same year as the IRS. It's almost like it was on purpose.
It's quite a master plan.
This is Jekyll Island, where in 1910, representatives from the Rockefellers, Rothschilds, Morgans, and other private bankers gathered secretly to draft the legislation that would create the Federal Reserve. I found it revealing that in the same year the Federal Reserve was founded, 1913, the Internal Revenue Service was also established. An income tax was then instigated so you and I would have to pay the politicians' debt plus interest to the bankers.
The problem is we have a privately owned central bank system in the United States disguised as a government-owned system. Now, if you look in the telephone book here in the Washington, D.C. area, you look up for Federal Reserve in the blue government pages, it's not there. It's in the white pages right next to Federal Express. It's a privately owned central bank.
Central banks are banking cartels.
So this is a big problem that we have, and a little bit what he talked about there. So every dollar, every paper dollar that you use, you're borrowing it. So you earn your money. You think it's your money, but it's not even your money. You don't have it in gold or Bitcoin or Global Boost or Litecoin or one of these other, silver. Something that's actually yours that you can sell. You actually borrow the dollars. Every $100 that you use, you pay the central bank $3 for. For every dollar that the Congress issues, we pay about $3, or for every trillion, I guess it's 300 billion.
Yeah, it's not a U.S. Treasury note that's backed by gold or silver. It's a debt note issued by a bank where they make profit off it.
And
it's nothing for the country or for your livelihood.
Right. And they're able to really control what's going on by this. Here, I'm going to play, David Icke or David Icke. How do I say that?
Icke.
David Icke. This guy has been a visionary. Sir David Porter, has been talking about David Icke for a while. And sometimes I have to compartmentalize. I can't take it all at once.
To destroy its farming base. Why? The Netherlands, the second biggest exporter of food in the world, is targeting farmers to destroy them and get them off the land, which is where all these farming protests in the Netherlands have come from. At a time of food shortages and supply chain problems, you are targeting the second biggest exporter of food in the bloody world to destroy its farming base. Why are you doing that? If people depend on you for what's left of the food, you control it. Where food is abundant and cheap, you do not control it. Where energy is cheap and abundant, you do not control it. Scarcity equals dependency equals control. And that's why they're targeting the food chain, they're targeting energy supply, they're targeting everything.
They're targeting everything.
The Netherlands, the second biggest exporter of food in the world, is targeting farmers.
So, go ahead.
Food really is the comfort for man. You ever leave the house, forget your wallet, but you're like, I have enough money in my change drawer to grab a bite to eat. I'll be fine. I'm good. I ate.
Well, and the new thing is water. So when you talk about these families that started the central banking systems across the world, they control, I was reading yesterday, I don't have the video pulled up, 1/3 of the world's water. And that's the new play. So they're pushing now the food. They want, food is kind of in abundance at the moment. But that can all change.
Look at Venezuela. Venezuela had that crazy problem with the food shortage, and they were robbing the neighbor by neighbor for their food.
For food. So
this is Hunger Games.
I want to share this too, because of course we always say you need crypto, you need precious metals, and
private property will be great.
Private property, and you need cash.
Yeah, you can cash that all out for fiat, the fun coupon.
Yeah. There's actually one more central bank video, if I can pull it up really quickly, I want to show. I've shown this one before, but it is it's important that people see it. Here it is right here. Hold on. This is the central bank. This is what we're talking about, guys. We have to get out of this central banking system in order to free ourselves. We need to get into gold. We need to get into silver. We need to get into, you can hold silver and gold, but you also need crypto and cash, but you need crypto so you can send it around, use it. Same thing with cash. Cash might go to zero.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, two specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push once again legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged. Putting the pieces together a few years later, Frederick Allen of Life magazine wrote, "The Morgan interests took advantage to precipitate the panic, guiding it shrewdly as it progressed." Unaware of the fraud, the Panic of 1907 led to a congressional investigation headed by Senator Nelson Aldrich, who had intimate ties to the banking cartels and later became part of the Rockefeller family through marriage. The commission, led by Aldrich, recommended a central bank should be implemented so a panic like 1907 could never happen again. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support. And 2 days before Christmas, when most of Congress was at home with their families, the Federal Reserve Act was voted in, and Wilson in turn made it law. A world banking system was being set up here, a superstate controlled by international bankers, acting together to enslave the world for their own pleasure. The Fed has usurped the government. Now, the public was told that the Federal Reserve System was an economic stabilizer, and inflation and economic crises were a thing of the past. Well, as history has shown, nothing is further from the truth. The fact is, the international bankers now had a streamlined machine to expand their personal ambitions. For example, from 1914 to 1919, the Fed increased the money supply by nearly 100%. Resulting in extensive loans to small banks and the public. Then, in 1920, the Fed called in mass percentages of the outstanding money supply, thus resulting in the supporting banks having to call in huge numbers of loans, and just like 1907, bank runs, bankruptcy, and collapse occurred. Over 5,400 competitive banks outside of the Federal Reserve System collapsed, further consolidating the monopoly of the small group of international bankers. Privy to this crime, Congressman Lindbergh stepped up and said in 1921, "Under the Federal Reserve Act, panics are scientifically created. The present panic is the first scientifically created one, worked out as we figure a mathematical equation." However, the panic of 1920 was just a warm-up. From 1921 to 1929, the Fed again increased the money supply, resulting once again in extensive loans to the public and banks. There was also a fairly new type of loan called a margin loan in the stock market. Very simply, the margin loan allowed an investor to put down only 10% of a stock's price, with the other 90% being loaned through the broker. In other words, a person could own $1,000 worth of stock with only $100 down. However, there was a catch to this loan. It could be called in at any time and had to be paid within 24 hours. This is termed a margin call, and the typical result of a margin call is the selling of the stock purchased with the loan. So, a few months before October in 1929, J.D. Rockefeller, Bernard Baruch, and other insiders quietly exited the market. And on October 24, 1929, the New York financiers who furnished the margin loans started calling them in masse. This sparked an instantaneous, massive sell-off in the market, for everyone had to cover the margin loans. It then triggered mass bank runs for the same reason, in turn collapsing over 16,000 banks, enabling the conspiring international bankers to not only buy up rival banks at a discount, but to also buy up whole corporations at pennies on the dollar. It was the greatest robbery in American history. But that didn't stop there. Rather than expanding the money supply in order to recover from this economic collapse, the Fed actually contracted it, fueling one of the largest depressions in history.
So it's crazy because, a lot of this stuff, like people don't know this stuff. They don't know.
That's why we have to continue to educate.
We have to continue to educate. Right.
That's Impact Live, Money in the Morning.
Impact Live, Money in the Morning. We really enjoy doing it as well. It's early morning here. David sent this. I'm going to share. Wait a minute. Where is it? Is it post yet? Just posted, I think. You shared that meme that showed 10 of these would buy a house. Yes.
Yeah, we're living in a meme culture, and that's what's so exciting about our decentralized media platform that we designed, that Global Booster. It's immutable, and you're able to not get deleted off of your feed.
Look at this.
Oh, yeah.
10 of these would buy you an average home in 1920, and 10 of these will buy you an average home in 2024.
And by average, we mean a big, fat, comfortable home that your wife will be proud of you for.
Exactly. So, you know, that is pretty interesting. And you see, guys, crypto is hard to buy.
Opens the question with the ETFs. It's going to be more difficult to get actual Bitcoin, as they hold a large majority of the supply. Do you think they're going to let that go? No, they're going to trade it amongst the banks. And
they're going to trade paper. They're going to trade paper. They're going to hold the real stuff, just like they did with gold. They took all the gold a long time ago.
That's why I'm holding out for that $1 million coin. I'm not letting go. Are you letting go? I'm not. I have other coins.
I plead the fifth on all of this stuff. There's one thing that we always said, and I know you're just talking, but back in the day, people always want to know, how many do you have, Bruce? Well, we always talked about Bitcoin, but you never talked about your Bitcoins, because that can be dangerous. I want to play one more video here because we're running out of time. But if you, with this at cost metals, if you get involved in that, see, that's easy to get involved with. It's hard to buy crypto, and we're going to make that easier as we move forward. But it's easier to get involved here, and this is a decent way to get involved. Look at what happens if you bought this. If you join the club at costmetals.club, that forwards to the .com, look what happens. You get 3 of these with the package. This is how much you have compounding if you bought every year since 1986. Things really start moving here in a minute.
Yeah, there's a bit of fluctuation in there. They were good prices. Damn.
Boom, 820
That was good.
grand. I know we got to cut it. Thanks, guys. Thanks for joining in.
See you
Let's
next
take
week.
these guys out.